Welcome to the Renewal Borrower module. This presentation reviews loan repayment, ways to save on interest, consolidation, default, and exit counseling. Federal student loans, also called direct loans, are issued by the U.S. Department of Education and follow federal repayment rules and protections. Direct subsidized loans are available to undergraduate students with financial need. You must be enrolled at least half-time, and the loan amount cannot exceed your financial need. The Department of Education pays the interest while you are enrolled at least half-time, during the 6-month grace period, and during approved deferments. Only loans disbursed between July 1st, 2012 and July 1st, 2014 had limited grace period interest benefits. Current subsidized loans do include grace period interest coverage. Direct unsubsidized loans are available to undergraduate and graduate students. Parent Plus loans are federal loans available to parents of dependent students. These loans require a credit check and are the parent's legal responsibility to repay. Federal loans have annual and lifetime borrowing limits. Limits vary depending on whether you are a dependent or independent student. Annual limits control how much you can borrow each year. Aggregate limits cap the total amount you may borrow over your lifetime. The Master Promissory Note, or MPN, is a legally binding contract. By signing it, you agree to repay your loans, including interest and fees. If your federal direct loans were first disbursed before July 1st, 2026, several repayment plans may still be available. Some of these plans are being phased out and will not be available forever. Federal student loans may be repaid early, with no penalty. Paying extra when possible can reduce the total interest you pay over time. The standard repayment plan has fixed monthly payments based on your loan balance. The typical repayment term is 10 years, though under newer rules it may range from 10 to 25 years depending on the amount owed. This plan usually results in less interest paid overall. The graduated repayment plan starts with lower payments that increase every 2 years. This option may be helpful if you expect your income to grow, but it often results in more interest paid than the standard plan. The extended repayment plan is available to borrowers with larger loan balances. Payments can be spread over up to 25 years, resulting in lower monthly payments but higher total interest. Some income-driven repayment plans are considered legacy plans and are being phased out. These include income-based repayment, pay-as-you-earn, income-contingent repayment, and the SAVE plan. Borrowers may need to transition to other plans before required deadlines. Loan repayment options for loans disbursed on or after July 1st, 2026 may differ. Always review current options at studentaid.gov or with your loan servicer. Federal direct loans include a 6-month grace period that begins when you graduate, leave school, or drop below half-time enrollment. No payments are required during the grace period. If you re-enroll at least half-time before the grace period ends, repayment is paused. Each loan only receives one grace period. Interest is the cost of borrowing money. The principal is the original amount you borrowed. Interest is usually shown as a percentage of the loan balance. Compound interest means interest is added to unpaid interest. This works for you when saving money, but against you when borrowing. When borrowing, unpaid interest increases the total amount you repay over time. Federal loan consolidation allows you to combine multiple loans into one payment with a fixed interest rate based on a weighted average. Ways to save on loans include paying interest while in school, borrowing only what you need, returning unused funds, using loan calculators, setting up automatic payments, and applying windfalls toward high-interest loans. Understanding how interest grows can help you borrow more responsibly and reduce long-term costs. Deferment temporarily postpones payments for qualifying reasons, such as returning to school, unemployment, military service, or medical treatment. Interest does not accrue on subsidized loans, but does accrue on unsubsidized loans. Forbearance allows for temporary payment reduction or pause due to hardship. Interest accrues on all loans and should be used only when necessary. Federal loans may be discharged in cases of death or total and permanent disability. Documentation is required. Default occurs after long-term non-payment and can result in serious consequences, including loss of future financial aid, wage garnishment, tax refund seizure, credit damage, and collection fees. You can view loan balances, interest rates, repayment status, and servicer information by logging into studentaid.gov and selecting My Aid. Your loan servicer manages billing and repayment. You must notify your servicer if you change your contact information, enrollment status, or school. Exit counseling is required when you graduate, withdraw, or drop below half-time enrollment. It reviews your loan's repayment options, budgeting basics, and how to avoid default. Exit counseling is completed at studentaid.gov. To request a loan, visit the main Cerro Cosa website and use the search bar to find direct loans. Review the requirements page, then scroll to Step 1 and select Request Loan. Returning borrowers must submit all required documents before loans are reviewed. These include the Cerro Cosa Loan Request Form, a signed master promissory note, a counselor-approved long-term educational plan, a valid federal ID, loan servicer verification, and completion of this renewal borrower module. If you are on financial aid warning, a progress report is required and loans are finalized after grade review at the 5 or 9-week mark, depending on the term. All references are contacted as part of the review process. All required documents must be submitted completely before loans can be processed. Loans are reviewed and approved on a case-by-case basis and are not guaranteed. Loans may be denied if eligibility requirements are not met, information is conflicting, or if approving the loan may pose a risk to the borrower or institution. Staying informed about your student loans helps you protect your financial future. If you have questions or need assistance, contact your loan servicer or our financial aid office.